Hello and welcome to this week's special presentation. My name is Jim Penna. I'm the Manager of Retirement Services here at VectorVest, and I'm very happy to be hosting this week's topic, which is titled Transform Your Retirement Portfolio. Today, we are going to talk about something incredibly important, how to transform your retirement portfolio so that it not only grows steadily, but also generates real income and stays protected even in uncertain markets. Now, for many investors, retirement feels like a balancing act. How do you pursue growth without taking on too much risk? How do you generate income without stretching for yield in riskier assets? And how do you protect the wealth that you've built from the next big market drop? That's exactly what we're going to talk about today. I'm going to show you how I use the VectorVest system to find safe, fundamentally strong companies for capital appreciation, how I use the program to find quality dividend stocks that have a history of both dividend safety and growth. Then we'll explore how to create consistent income by selling covered calls and how to protect your portfolio using protective puts as insurance when the market shows signs of weakness. Now, these strategies are not about chasing returns. It's about intelligent, disciplined investing that aligns with your retirement goals, which should include safety, income, and peace of mind. So let's get started. I will rarely do a presentation on retirement in the VectorVest program without this slide. We talk about the goal of retirement here at VectorVest is retiring with peace of mind. And we talk about the three core principles of profit, provide, and preserve to be able to reach that state of peace of mind. We begin with profit. When you hear us talk about profit, we're talking about capital appreciation in a growth portfolio. Right? We want you to go from having that roller coaster portfolio to a more steady climb, finding the right stocks in rising markets. Now listen, there's always going to be some drawdown, but we want to turn that into a much more steady upward movement for the portion that you allocate to capital appreciation. Next is provide. Provide is all about income. Instead of having, a couple of random stocks that pay a dividend and you have some income trickling in from there, we want to change that for you. We want there to be a steady stream or steady flow of income into your retirement portfolios. And then perhaps to me anyway, the most important core principle here is capital preservation. And basically, we want you to go from being unprepared and not knowing what to do in the market when it moves against you to being prepared. So that's our goal here in retirement services. And I like to look at it from a quote from Warren Buffett that stuck with me for years. And he said, "The interesting thing about investing, it's not like the Olympics. You don't get extra points for the fact that something is very hard to do. So you might as well just step over the 1 foot bars instead of trying to jump over 7 foot bars." And it's really the mindset and the concept I like to take using VectorVest. Again, we buy safe, high quality stocks for both growth and dividend. We make sure the market trend is in our favor, and we use a basic prudent/conservative exit strategy for those positions. Now, why growth and income? Right? I always talk about growing, protecting your portfolio, and having that income. Well, it's important because income, of course, provides cash flow during your retirement. I read so many of these articles, the headline is always, is 500,000 enough to retire? Is $1 million? Is $2 million enough to retire? And the headlines always, insinuate the fact that $1 million you have to retire, or whatever your number is, doesn't have the ability to grow. Right? So we're going to show how income can provide that cash flow. The growth portion of your portfolio, of course, helps with inflation and grows your wealth, right? Adds to your net worth. When we combine both growth and income, I strongly believe that it reduces risk in your overall retirement portfolio and improves your ability at consistently growing your portfolio. And it should, anyway, align with the long-term retirement objectives that you set for yourself. We need to talk about asset allocation when we talk about our retirement investing. And we talk about it within the equity portion of a retirement portfolio, emphasizing that this allocation goes in step with the cash that you allocate to the equity markets. Right? So we're not looking at alternative investments or real estate or annuities or any other retirement investment that you may have. We're talking about assets allocated to the equity market. And so asset allocation within the equity market plays a very critical role in balancing both growth and income. So for investors with a longer term horizon, 8-10 years from retirement or more, a larger allocation may go to the capital appreciation portion, as these investments offer higher growth and potential and can compound significantly over time. In contrast, those either already in retirement or closer to retirement may benefit from shifting a greater portion of your equity into reliable dividend-paying stocks. Now, you still get capital appreciation from these. It's not going to compound as dramatically as the growth stocks, but you can generate that consistent income with lower volatility. So striking the right balance between growth and dividend income should be based on your time horizon and income needs, ensuring that your portfolio continues to grow while generating the cash flow necessary to meet your retirement expenses. Now here, we're also going to talk about covered call income, selling covered calls, whether it's against stocks we already own or doing what's called the buy right. I'm going to address that here a little bit in this presentation, but just know at the end of this presentation, we've got a great offer for all VectorVest members. We are giving away free to you access to the Retirement Portfolio Transformation course, which goes into greater detail on all of these aspects of retirement investing. So this is just a generic allocation, right? 30, 30, 30 allocation percent of your portfolio, and then leaving cash because we're going to need that cash to be able to buy protective puts when the market moves against us. One more important factor is being a prudent or conservative investor, I believe, is essential when building your retirement portfolio, especially as you approach or enter retirement. We have our strategic investment matrix, which we relate to often here at VectorVest, no matter what your objectives and investment goals are. Here, we're going to focus on the prudent investor. It's the ideal scenario, of course, low risk, high reward, and it's where, we all want to end up being on this matrix here. For our retirement purposes, being a conservative investor, does help reduce the risk of major drawdowns, allowing the portfolio to recover, more easily from the market shocks that we've seen. It's a good combination, again, depending on where you are in your retirement planning. Okay, that's the overview of what we want to do, meet that goal of retiring with peace of mind. So let's jump into it. We'll start with capital appreciation or profit. We say that capital appreciation comes from owning companies with consistent and predictable financial performance. What that means in the VectorVest program is that it's all about stock safety. Dr. DeLito wrote in Stock Strategies and Common Sense, intelligent investment decisions cannot be made without including a knowledge of stock safety. Do not let stock safety be your missing link. And so when we talk about building a growth portfolio based on high quality, safe stocks, the one search I'll share with you in this presentation is ruler stocks. In my 18 years here, this is by far my preferred place to go to find good quality stocks, whether I'm trading them or investing in retirement portfolios. The key takeaways here are the earnings growth rate and the stock's relative safety. So just to make this list in our Unisearch tool, the underlying company has to have an earnings growth rate of at least 14% per year, and the stock's relative safety, which is a proprietary indicator in the VectorVest program, has to be at least 1.4 or higher on our 0 to 2 scale, meaning that company's predictability and financial performance are very strong. Let's jump into the program and take a quick look at ruler stocks. So from the home page here in the VectorVest program, I'm going to go up to the Unisearch tool, and that search is found over on the left in the search directory under the Prudent folder. So I can continue to scroll down and I find ruler stocks, and I could bring these stocks up currently in the market, and you can see what stocks top the list as we speak here. If I scroll over a bit, you'll see the VectorVest proprietary indicators on stock analysis. High relative safety stocks, I've always said the vast majority of the time, relative value, which is more inclined for higher growth stocks, is very strong. You're going to see things like the earnings growth rate, very strong as well. Our comfort index numbers and all of the other numbers that are important come into play. Now, ruler stocks don't always pay a dividend, but when they do, they are safe in growing dividends. So that's the search, one of the searches or one of the strategies that we use for our growth portfolios. So that's the type of stock we want to find. If I go back up to the main toolbar, I'm going to share with you just some of the portfolios we use in our retirement coaching group and that we will show you how to build in the retirement portfolio transformation course. Two ruler stock portfolios here. One is about a year and a half now, from January of 2024, using, again, confirm calls to enter and very basic prudent stop criteria. And you can see it's up over 61%. It's about a 45% annualized rate of return over the last year and a half. And in this market that we've seen, one of the great things is we got that confirmed down call back in December. And you can see there's not a lot of drawdown. We were in cash for a while here in this portfolio. And so the risk management techniques kept us on the sideline during the chaos that we saw from December up until recently in the market, where it's had a nice move to the upside. Then I have a longer term ruler stock portfolio. It's up over 230% since January of 2017. Now you're looking here at an annualized rate of return of just about 28%. Annualized rate of return of 28%. That's in our prudent retirement portfolio. Something to think about. And that doesn't include selling covered calls or using protective puts to help against these drawdowns that we see. Next, I'm going to talk about providing income. So we shift gears here. Right now, we're going to talk about steady income from dividend portfolios, which is part one. And then part two, I'll just touch on the covered calls and the process we use to generate income there. One of the searches of several, we use two or three. The one I'm highlight here in this presentation is called Pale Blue Chips. Again, relative safety plays a key part. It has to be at least 1.25. Earnings growth rate is important. And in this particular search, we actually take each dividend indicator that we use to track dividends and put parameters on it to make sure it's a quality dividend payer. Okay, so again, in the Unisearch tool, if I go ahead and go back into the program here, I'll click on the Unisearch tab, and this one is going to be in the conservative folder, and I'm going to choose Pale Blue Chips. There are others we use. Prima Donnas is another one I like a lot, and so there are several of these. And again, just to give you an idea of the type of stocks that come to the top of the list, if I scroll over a bit, you'll see, again, the relative safety numbers, putting all of the other numbers I care about in very good position here. Earnings growth rate is very strong. Now, these all pay a dividend, right? So the dividend yields are very good, not quite as high as our blue chip dividend payers, which is our main retirement dividend portfolio. But Pale Blue Chips and that Prima Donna search are what Dr. DeLito used to call the best of both worlds, right? We get good, safe, rising dividends, and we also have the opportunity for capital appreciation as well. So the dividend safety on the 0 to 99 scale is very strong. Growth and the actual dividend yields that we're getting are good as well. So that is just the one I wanted to share here. If I go back to our portfolios, you'll see Pale Blue Chips. Now this is about, it's about 2 years old at this point, this portfolio, up 43%. You see the current holdings. We have some nice winners here in the current portfolio as we see it. So that's our growth and our dividend. I'm going to just briefly talk about selling covered calls here and show you the power of what I have admiringly come to call our side hustle, right? Just another way to generate income in retirement. Very quickly, covered calls, one of the best definitions for those who may be new to them or afraid of them because it's an option trade. Please don't do that. It's the most common, most popular, probably the easiest option trade there is to execute if you're new to options. Lee Lowell wrote a book called Get Rich with Options. He said, if you own shares of stock, you're not selling calls against them, you're throwing away money. And here's the great, this is all a covered call is. Right? This is all it is. There are traders who will give you money today for the right to take your stock away from you if it reaches a much higher price. Selling calls is a great strategy for padding your account. I can't believe some investors aren't taking advantage of it. And frankly, neither can I. Here's just a quick look without going into every variable of the covered call. I just want to show you what we do in our coaching group, what we've been able to accomplish. So this is just one of many trades in 2024. We had a very good year, 83% winning trades. We had a 23% return in our buy right covered call portfolio alone. We went out, VST was the stock, the Vistra Corp. We bought 100 shares at $115.38, and then we sold someone else the right to take our stock away at $120. And they paid us $4.35 to do that, which gives us a cost basis on the underlying position of 111.03. What happened? Well, just to give you a quick idea, when managed correctly and the process is followed, we were able to close that trade a week later, with a profit of $435. That's 4% payday in 1 week. That's the side hustle. Right? It's not going to be, generating, 100% returns every 2 weeks, but it's a safe, steady way to generate income in your portfolio. We go much deeper into that into the portfolio transformation course, again, which we're going to give to you for free. Let's go ahead and finish up with capital preservation. As I said, of the 3 core strategies, the 3 Ps, risk management, using protective puts, and preserving your capital, to me, is I think the most important. So another quote I use all the time from Mark Twain said, don't just sit there and worry, be proactive, do something, anything about what's worrying you. And that relates to managing your retirement net worth. So to reduce risk, what we do in our coaching group and in the course is we buy put options to protect either the individual stock. So if you choose, you could buy put options on the individual stock, or you can protect your entire portfolio by buying put options on index ETFs. Now, again, if you're not an option trader, buying a put option, you don't need to be an options expert to understand and learn how to do that. And so, again, I'm just going to show an example, and there were so many of them since December. I'm showing here buying a put option on April 2nd. Right? The market was moving sideways. Our indicator, the confirmed call was down. There was still uncertainty in the market. And it was the day of a big announcement coming out about potential tariffs. So we didn't know what was going to happen to the market, but we went out and bought some protective puts because of what could potentially happen with the uncertainty. And so it's simply an insurance policy. We bought 3 of the SPY, which is the ETF that tracks the S&P 500. We went out to the April 17th expiration, so it is a short-term insurance policy. We bought the strike, which was right at the money at $5.63, and if you bought just the put, you would have paid $8.81, which is what we paid. And actually, we did the bear put spread, but the price of the core piece of that trade was $8.81. So just about $2,500 to protect a portfolio anywhere from $100,000 to $200,000 equity portfolio would be enough protection. Well, what happened? We know what happened. The very next day, if you had just bought those 3 puts, you would have mitigated any drawdown in your retirement portfolio. It was worth $6,400 the next day. Had you decided to hold on to it a bit longer, you would have been as high as $15,000 protection. Now, we did the bear put spread, so we took in some great insurance premium, but not to that level. If you held it all the way to expiration, you would have walked away with about $8,800, mitigating the drawdown. In other words, just what an insurance policy does, covered the damage to your underlying asset. Right? That's what an insurance policy does. So if you are interested in transforming your retirement portfolio, this is the basic concept and strategy that we use in the retirement coaching group and in the retirement portfolio transformation course. So I mentioned it's free for all members. Retirement portfolio transformation, free for members. You do have to register for it. You have until May 21st. Go to VectorVest.com/transform, and you'll have the page will come up where you can register for the course. It was just updated with new videos and slides. Now, if you're watching this presentation and you are not a subscriber to VectorVest or not a member of VectorVest, you can still take advantage of the free course. Just go to our main webpage at www.vectorvest.com. Leave off the /transform. VectorVest.com. There you can sign up for our trial, which will then give you access to the free retirement portfolio transformation course. So just sign up for a trial and you're in. www.vectorvest.com. And what we also have for you are going to be bonus modules I'll talk about in a moment. These are the modules of the course. Module 1, we lay the foundation of how you need to set your goals and objectives. Remember, a goal without a plan is just a wish, as the old saying goes. Then we have each module dedicated to capital appreciation, dividend growth. We'll talk about selling covered calls to generate income, and then we'll end with eliminating risk with one trade. And that's how we cover the 3 core principles. VectorVest.com/transform. We do have 5 live mastery sessions as part of the free course. And those dates, in case you were interested in making sure you have the dates, May 28th starts every Wednesday at noon Eastern Time. And we'll meet. If you can't make it, we do record it and put it into the VectorVest University later that day, so you'll have access to it even if you can't make the live session. And you could submit questions to a dedicated email bin that you'll have access to. When you register, you'll get an email with all the information. So VectorVest.com/transform will get you there. We look forward to seeing you there. I thank you so much for taking the time, and I look forward to seeing you next time.